What if the very thing you think is protecting your money is actually the reason your balance is hitting zero? There is one specific mistake beginners make that turns a winning streak into a total liquidation overnight. If you don't master this shift in mindset now, no amount of trading education will save your portfolio. Let me show you exactly what's draining your account. Here's the brutal truth. The biggest trading psychology error isn't about lacking knowledge. It's about how you respond when real money is on the line and your emotions take over. Welcome to the emotional roller coaster of trading. Every single day, the market is designed to trigger your deepest psychological biases. And the number one mistake? Believing you're immune to them. Let's talk about FOMO, fear of missing out. You see a currency pair shooting up and suddenly your brain screams, "Get in now or lose this opportunity forever." Your strategy said, "Wait for confirmation." Your risk management said, "This entry is terrible." But FOMO whispers, "You'll regret missing this." So you click buy at the absolute worst moment. And here's what happens next. The chart immediately reverses.
Your perfect opportunity turns into a perfect loss. And now the second emotion kicks in even harder. Fear. Raw, paralyzing fear. Your account is bleeding and your finger hovers over the close button. Should you cut the loss or wait for recovery? Here's the fatal mistake. Instead of following your predetermined stop loss, fear makes you do one of two terrible things. Either you panic close for a small loss that would have reversed into profit, or you freeze completely. When you freeze, you watch that small loss become a massive account-destroying position because you couldn't execute your stop loss.
Fear paralyzed you into total inaction. Now you've taken a significant loss. And here comes the most dangerous emotion of all, the burning desire to win it all back immediately. Revenge trading. You completely abandon your strategy, double your position size, and chase the next setup with pure emotion. You're not trading anymore. You're gambling to heal your ego. And this is where beginners blow up their accounts. Not from one bad trade, but from the emotional chain reaction that follows when they don't have psychological control. So what's the actual biggest psychology mistake?
It's believing that knowing your strategy is enough. The real error is not preparing yourself mentally for how you'll respond when emotions hit. Professional traders don't avoid emotions. That's impossible. Instead, they prepare specific protocols for how they'll handle fear, FOMO, and losses before those emotions appear. Let me give you 3 strategies for dealing with losses without knee-jerk reactions. First, write your maximum acceptable loss before you enter any trade. Not in your head. Actually write it down. When the trade goes against you, you're not making an emotional decision.
You're following a plan your calm, rational self already made. Second strategy, implement a mandatory 30-minute break after any loss. This single rule will save you thousands. It breaks the revenge trading cycle before it starts. During that break, your emotional brain calms down and your logical brain comes back online. No revenge trading is possible if you're not at your computer. Third strategy, and this is crucial, keep a trade journal where you record not just what you traded, but how you felt. Were you anxious, confident, desperate? Track your emotional state. Over time, you'll see a pattern. Your worst trades happen when you're in specific emotional states. Once you see the pattern, you can create rules to protect yourself. Now let's talk about maintaining objectivity. The key is separating yourself from the outcome of each individual trade. One trade means nothing in isolation. Professional traders think in probabilities over hundreds of trades. Beginners obsess over whether this one trade wins or loses. That's the objectivity difference. To maintain objectivity, focus on process, not profit. Ask yourself, did I follow my rules? Not, did I make money? If you followed your rules, that's a successful trade regardless of outcome. Use data to remove emotion from decisions. Before entering a trade, check your statistics. What's your actual win rate on this setup? Not what you feel, what the numbers show. When you rely on data instead of emotion, you can't lie to yourself. The numbers don't care about your feelings. They show you objective truth about your trading performance. Here's your action plan. Tonight, before you take another trade, write down your emotional response protocol. What will you do when FOMO hits? Write the exact steps. What will you do after a loss? Write it down. What will you do when you want revenge? Write it down. Your future emotional self needs these instructions now. Then start your trade journal. Every single trade, record your entry, exit, profit or loss, and most importantly, how you felt before, during, and after the trade. After 30 trades, review your journal. You'll see exactly which emotions lead to your worst decisions. That awareness is the beginning of mastering your trading psychology. Remember, the biggest psychology mistake isn't having emotions, it's not having a system to manage them.
Every trader feels FOMO, fear, and the desire for revenge. Winners have protocols. Your technical analysis can be perfect. Your strategy can be profitable. But if you don't master your psychology, you'll still blow up your account. The market doesn't care about your emotions, and neither should you.